Hi, I'm Chad Smith, one of the managing partners at Reveille Wealth Management. This is the second in a series of videos that we are doing to highlight extremes that exist in the market today. In our last video, we focused on the relative outperformance of technology versus the rest of the market. In this video, we're going to focus on the extreme of the relative performance of large cap stocks in general versus small cap stocks today. This first graph displays that relative performance. Notice how right now we are back at historic extremes, where large cap stocks versus the Russell 2000 or small capitalization stocks in the US have been exceeding by a dramatic fashion the performance of small cap, rivaling that which we saw in the late 1990s. Once that peaked out back then, we saw large capitalization stocks underperform, small cap stocks in general catch up and outperform for several years. We're back at that extreme level again today. This next graph just highlights how extreme the outperformance of these mega cap, the largest of the large, actually is today. So what this shows is, historically over the last 30 years, in up markets, when you look at the S&P 500, which is a market capitalization weighted index, meaning it's influenced more so by the largest names in the index. But if you take the top 10 weightings of the S&P and then go back during up markets and see what percentage did those top 10 weightings represent of the performance of the index in that year. This year, we are at epic proportions. Over 96% of the returns of the S&P this year are attributable to the largest top 10 names in the S&P, the mega cap stocks. That is an extreme for sure. That reflects how concentrated the market performance in general this year has been in the largest of the large. What we are looking for is a pivot in that, where the rest of the market begins to catch up with the largest cap names that are arguably overvalued. So we are, once again, as I mentioned in the last video, cognizant of and trying to focus on these extremes and be prepared for when the pivot occurs or when the cycle changes and we begin to see evidence of that spreads across the rest of the market. And as that does happen and we see the rest of the market begin to turn on within our rules-based investment discipline, that will inform our allocation decisions. If you'd like to learn more about how our rules-based investment discipline works and how we in general approach portfolio management, please email us at info@reveillewealth.com. Thanks so much.